Hi guys, a very good morning. Um, so today we're going to do sums, we're going to do numericals, and there's Sunny also in the meeting. There's KJ. Hi Sunny, hi KJ. Hello Sneha, it's 10 a.m. And today what I'm going to do is just quickly recap for the ones who were there, like last class, quickly recap on what we've done in the last class. And then we're going to move to chapter 2 and do personal allowance and sums on that. Right. So KJ, Sunny, make sure that you are always ready with your mic and you have a proper internet connection. Am I audible, KJ? Hi Sneha, how are you? KJ, am I audible? Type in the chat box or unmute and speak. Sunny,
Yes, sir.
you can hear me?
Yes, sir.
Where are
Yes, sir.
you? Where are you attending this class from, Sunny? Which city?
Hyderabad.
Hyderabad. Okay. So I hope all of you can hear me. Jeet,
Yes, sir.
Iraq, KJ, everybody. Jeet, are you there? Okay. So
Yes, sir.
again, guys, just to brief those three who joined in the previous class, I'll just quickly do what we've done in that class, and then we will go to personal allowance and the sums on that. And I will try my best to finish off the second chapter today. Okay. Seha, the previous class, the first class you missed, and it's gone, right? So as I mentioned, this from today onwards, the classes will be recorded and uploaded on the LMS. Now, guys, again, for those of you who don't know, again, for a lot of them, today is the first class. So for those of you who don't know, my name is Shahz Farafi. Again, I've been teaching from a decade now in a lot of places. And I have handled all the papers of ACCA. In fact, the ones who are offline, I've handled FM, audit I've handled for you, right? Just these two papers for you, and now TAC. Uh, After your batch, I have a PM batch. So I've handled all the papers. And how I will teach is basically first 10 minutes. Now, again, we have something known as an academic audit. So I'm not supposed to do anything that is out of plan. And as per our plans, first 10 minutes has gone in what? Previous class asking questions. But I'll consider today's class as the first class because many new people have joined. Then what happens is I will teach. Okay. And then last 10 minutes, I will allow you to review everything I've completed and give me a rating out of 5. Babu, what time is the break today? For 10 class? 10. No, just come and tell me. Yeah, but just let me know. So obviously, first 10 minutes goes in asking questions, last 10 minutes goes in giving you time to go through everything that is done. And obviously, in between, I will teach. So it's a 3-hour class. So think about it, 3 hours is for 3 hours. First 10 minutes is gone, last 10 minutes is gone, and in between you'll have a 10-minute break. So technically it is 30 minutes gone, 2.5 hours, right? As per the plan, the break is at 11:25, and exactly it will be from 11:35. So from 10:10 to 11:25, I will teach, which is the first round of teaching. The second round of teaching will be obviously from 11:35 to our class is till 1. So till 12:50. So this is how the class is going to be structured. 10 ask questions. Ask questions, give you some information if it is the first class, give you some information if it is the last class. So 10 to 10, 10, that is what will happen. Then there's a break, teach, and then review. Well, G, Sunny, I hope all of you are clear on this. This
Yes,
is the
sir.
timetable. So anytime you want, I don't know, I mean, you want to order something, you want to eat some snacks. So you know for sure when your break is. You don't need to like sit and speculate, right? So this is how it is going to be, right? And again, now what else? Every week there is going to be a test. This is new information even for the old people who came. Every week there will be a test. This test will be assigned on your LMS, right? So every week's test, you go and write that test, it will automatically grade you. So I'll not correct that test as such, right? So obviously you have to make sure that you are doing it sincerely. Otherwise, obviously you will not be able to know where you stand. So every week there will be a test. You can do it at your convenience anytime in the week. Please don't ask me when should I do the test. No, your convenience, you do it. This week's test, you do it whenever you want. Once it's assigned, it will notify you in the LMS. Okay, and once you've got your scores, you've got your scores. Excellent. We'll be able to track. Again, we have somebody known as an academic auditor who checks my performance and your performance. Although I'm one of the founders, I've hired somebody to track my performance also for quality and to make sure that we're giving you the best. And there is something known as a weekly activity report. What does this weekly activity report say? Is in the group every week on Friday, you will write what you have covered in that week. What did you study in that week? You will mention in the group. Why? Again, the short form of weekly activity report is war. So it should be like a mini war in the group. Right? For example, Sneha studies 8 chapters and finishes off in the first week. Sneha, confident? 8 chapters Sneha will study and finish in the first week. So Sneha will type in her war that this week I have done 8 chapters, 50 questions from the exam kit completed, Kaplan, 200 questions done from BPP. So she will type it in her war. So others, Sujay will get jealous. So Sujay will try to beat that. So there's a war. Ashank didn't do anything. So Ashank will panic and get scared. That is what I want for Ashank to get that guilt. You know, that guilt will make you study. Sometimes what happens when you call your friend before the test and they have studied a lot and you don't get happiness. Why? Because you have not studied. Anytime Sneha, it happens, you call your friend, you have not studied, but your friend has studied. You feel happy? No. So you feel scared, right? That is what should happen with you people. Anyway, more on that shortly, but it's 10:10 and we have to ensure that we are dot on time. We're starting things dot on time. Okay, now again, for those of you who were there, just the three of you, just excuse me for a few minutes, starting few minutes, and then we will, after that, you see personal allowance and all that will start. Right? Now, the current tax system, how is it? Okay, especially Sneha and the 7 others who are there online. It's like this in your say school or college. Okay, the current tax system is like, again, I'm giving you a small analogy or example, but in your school or college, say the teacher rewards you for good performance, for doing something good, good activities, or you are helping a friend. So the teacher rewards you. And the teacher punishes you for certain activities, like, I don't know, coming late to class, Sneha, right? So certain activities are rewarded and certain activities are punished. The UK tax system works in the same way, right? What the UK government does is it rewards people for good behavior and kind of charges people for bad behavior. What do I mean by this? Is probably Ashank can mention. What kind of behavior do you feel, Ashank, the government rewards? Very good, very good. But that was not the first point. Again, it's like this. It's like saying that if you save, if you have savings, then we will reward you. So the government is trying to do what? The government is trying to encourage savings, right? So one place the government is encouraging you is if you save. So the first place they're encouraging you is if you save. Save what? Save people? Save the world? No. If you save money, the government rewards you. Okay. What other activities does the government like? Does the government reward you for? Yes. If you are a kind person, okay, say Hurera, you are a very kind person and you're going and doing a charity, right? So Jay is already happy. So if you are doing a charitable activity, donation, the government is what? The government is happy. And the government rewards that. I don't know why the head is half broken, but the government rewards this. You understand? So the other activity which the government rewards is charitable donations. Okay. So the other activity is charitable donations. This is also something the government rewards you people for. Or if you are somebody who is starting a business, if you are getting into entrepreneurship, like, again, if you are starting a business, would your parents be happy if you're starting a business of your own? Okay, if you are okay, but starting a business means more entrepreneurs. More entrepreneurs means more jobs. So starting a business is a good thing. It's for the government, right? So the government encourages that by rewarding you. You know, when there is a small child, when the child does something nice. For example, I'll share my story with you. But once what happened was, in class, I think I was in grade 5 or something. In class, teacher gives you paper after correcting it and says, if there are any mistakes, let me know. How many of you have experienced this? Neha, you've experienced. Online, you people have experienced. Priya, Sunny, Sunaina, Krishna, Kushika, Huraira, Chirag, Jeet. Have you experienced this? Yes or no? In school, either type it in the chat box or unmute and speak. Yes, you have. Right. So this happened with me also. Right. And the teacher gave me my paper and she gave me 10 out of 10. Right? Full marks she gave me. But there was one mistake. The mistake was she by mistake gave me 1 mark. Right? So there was one mistake. She by mistake gave me 1 mark. So what did I do? I went to her. I went to her honestly and I said, "Ma'am, you have given me 1 mark by mistake." So she was very happy, like a small, I was in fifth standard, so 9 or 10 years old. So she was very happy and she wanted to reward me. So what did she say? She said, "No, no, you keep this 1 mark. It is for your something, handwriting." Right? So certain things teachers encourage, same way certain things the government encourages, right? For example, as I said, entrepreneurship, I'm very bad with spellings, guys. Entrepreneurship, investments. So these are certain things that the government encourages you to do. What else? As Ashank mentioned, the use of probably electric vehicles. The use of electric vehicles. Why? Because again, what will happen? Ashank, if we use electric vehicles, how will it benefit? Pollution and all that would be avoided. So these are certain things the government encourages. Okay. Certain things the government discourages. Okay, let's see. Sujay, do you remember anything the government discourages? The use of cars.
Tax evasion.
What happened? Krishna, you said something?
Tax evasion.
I can't hear you. Can you type?
Tax evasion.
No, you just please type. I'm really not able. Tax evasion. Did you say tax evasion?
Yes.
Okay, we will come to that. Okay, but forget tax in this paper for now. For the next few minutes, just forget tax. I'm just assuming that everybody is brand new, fresh, so you don't know anything. Okay, the government, so you don't know what is tax also, right? But you just know that the government discourages certain things, right? The government discourages the use of motor vehicles because it is going to pollute. Okay, what else does the government discourage? Sneha, were you there when I mentioned this? So you were like taking down notes, right? What else does the government discourage? Will the government say, yes, yes, go and drink? No. No. Right. Aditya, sure. So smoking and drinking is discouraged. If you go to theater also before the movie starts, there will be, I have it by heart. Maybe sometime after class I can do that part. But smoking and drinking is discouraged, right? And overall environmental pollution is also discouraged. So these are certain things that the government encourages and certain things that the government discourages, right? And that's it. So certain things the government encourages and certain things the government discourages. If you want, I can give you 1 minute to make a note of this. Now, what the government does, as I said, is encourages and discourages certain things. Now, when you make money, say you have a salary of 10,000. When you come to your house, your father says, what does your father say, Aditya? In our example, we saw this. You have to give him 10%. So the father says, give me 10%. Meaning whatever you are getting as money. Now I don't want to use the word income because that can be misleading. But anything you are getting as money, anything you are receiving, you have to give a percentage of
हाँ,
that to father, because using that
और
money, your
तुम
father
इंस्टाग्राम नहीं देखते क्या?
will run the
कह
house,
रहा अरे कैसा है कि जो एसीसी होता है
right? Using that money, your father will run the house. This is the same analogy, right? Sneha, whatever you make, whatever money that you get, right? Whether it's 1 lakh, 10 lakh, whatever it is, whatever that you get, whatever money, when you make money, I don't know how, whether it's your income, whether it's you got money from your father, from your ancestors, I don't know how, but whenever you get money, whatever money you get, instead of your father in your country, like our country is our home, right? In your country, in your home, the government is like your father. But in your country, whenever you make money, your government says you have to give me, again, I'm not going to put 10%, but you have to give me a percentage. Using that money, your government will kind of run the country. This is basically how tax, this is basically the concept of tax. Whatever money that you get, a percentage of that you have to give it to your government. The government will take that money from you and put that money into the country, right? Will make good facilities for you, transportation, public transportation, certain benefits it will give you, and so on, right? This is what taxation is all about. When you are charged for the money that you make by the government, right? That is what is taxation. So whatever you make, whatever you get, whatever money you get, you have to give a percentage of that to who? The government, and that is the tax. Are we all clear with what is tax? Right? Whatever you make, a percentage of it is paid to the government, and that is what is tax. Again, nobody will ask you definitions, and this is not even the definition. This is simply what I am putting for you to understand in brief and in basics what tax is. Okay. Now, as I mentioned, would you be happy if the government takes more from you or less from you? Yes. What do the online people feel? You want to give more or less? Type it. Less. Right? So, as I mentioned, the government rewards you. Going back, probably I can go back to the previous page, but the government rewards you by charging lesser taxes from you if you do these things. The government encourages you, the government encourages you by charging lesser tax from you for if you do these things. And the government discourages you by charging higher taxes from you if you do these things. Right? So as you all mentioned, you want to pay lesser in taxes. So the government encourages you to do these things. And the government says, we'll charge lesser taxes from you. Nobody wants to pay more. So the government discourages certain activities. These activities the government discourages. How? By charging a higher tax for those activities. This is how the UK tax system is right now. Okay. And that is the first thing that we've covered. Once we cover something, it will be marked in green, means it's done. This is how the UK tax system is right now, and I can prove this by showing you the textbook. The UK tax system, again, you can see my notes along with the textbook side by side. Again, I don't have a habit of reading from the textbook because if you had to read, you could just do self study, right? So I don't normally read, but the reading part, I encourage you to do it on your own. Like you can now, I'll give you 1 minute to read and write. Okay, if you want to write this, you can write this, or if you want to read on the left hand side what is there, you can read that as well. But that is what it is. That is what I have explained basically. Right. So basically, if you write down my notes, it is already covering the textbook. So my notes are enough. Right. My notes are enough for you to study. So it's the same thing that we are covering. Right. So that is this current tax system. Now, the next thing we're going to look at is progressive, regressive, and proportional taxes. What is progressive? I'll give you an analogy. Now, somebody asked me a question. Sir, is it the latest tax textbook? No, Chirag, it is, yes, I mean, it is valid as in this is not something that it is out of date. It was until March of 2025. Whatever latest small syllabus changes are there, we will incorporate that into the classes. Okay. Now, again, next page, new topic. And the new topic is this. Guys, if you are very smart, say there is somebody who is there, he is very smart, he is very talented. Why are you looking at him? He is very talented, right? I appreciate your confidence in. So, if you are very smart, if you are very talented, do you think the teacher will give you more work or less work to study and all that? What would the teacher do? Like, imagine me. If I see that you are studying very hard, you are very talented, you are understanding things, you finish the Kaplan kit fast, you finish the BPP kit fast, will I give you more work or will I say no need? You are already smart. What will I do? I'll give you more work, right? So if you are smart, if you are very talented, the teacher gives you more work. This is how the progressive system works. Again, I will mark it, the analogy in red and the topic in green. But what I mean is, if you earn more, you will pay more. Just like if you are more smart, you will study more. You will be forced to study more by me. Right? So, same way, if you earn more, you will pay more. That system is the progressive taxation. Progressive taxation says whoever earns a higher amount will pay a higher tax. Right? For example, if you see in the textbook, again, I don't normally show the textbook while I'm teaching, only after I finish, I will show. But progressive taxation is as the income rises, the proportion of taxes paid will also rise. Right? So again, this is where you pay more if you make more. This is progressive taxation, right? And that is the analogy that I have used. Clear? Next comes this. Say I give homework in class now. But for some people, that homework will take more of their time, effort, and brain. Some people will be able to do it fast. For them, it will be too easy. But for some people, it will take more of their time, effort, more of their hard work. I give homework in class, I give the same homework. Same homework. But for some people, it will take a higher percentage of their effort. Sujay, are you understanding what I'm trying to come to here? Which type of taxation am I trying to regress? Right? All of you agree with me, right? If I give homework, some students, for them, it is taking very less percentage of their effort. Some students, it takes more percentage of their effort, right? For example, the example used in your textbook is of petrol, right? If you go and put petrol in your vehicle, and say you have to pay, and your in tax for petrol, suppose, for example, is 5%, right? For some people, 5% will be a very small percentage of their income. For example, my salary is 2 lakh. So for me, 2 lakh is what? 5% of 2 lakh is how much? 10,000. 5% of petrol, sorry, 5% of petrol. If you go and put petrol and it says in your vehicle and it says that tax is 5% of, again, you put petrol of 100 rupees. So to me, 5% of 100 is only 5 rupees. So for me, somebody who's earning 2 lakh, 5 rupees is a very small tax that I'm paying. But imagine the daily wage worker. Daily wage worker salary. For him, his salary is only 50 rupees per day. When he goes and pays 5% of 100 rupees, for him, he is paying a very big part of his income. Are you understanding? For me, 5 rupees is a very small proportion of my income. 5 rupees out of 2 lakh is a very small percentage. But for the daily wage worker, 5 rupees from 50 rupees is a very big percentage he is giving away. Right? That type of taxation where this is happening, where basically the more you earn, the lesser percentage you will pay in tax, that is regressive. This is basically where here what is happening is the more you earn, if you go and put petrol in your vehicle, tax is 5% of petrol. Suppose you put petrol of 100 rupees. Of 100 rupees, you will pay 5 rupees, right? But for different people, it will be a different percentage paid. For example, for me, for 2 lakh, 5 rupees is a very small percentage. For somebody earning 2 lakh, that is a higher income, 5 rupees is a small tax. So you see what is happening? You're charging a low tax for a higher income person. And for somebody earning 50 rupees, basically a low income, 5 rupees for him is a very big amount, is a big tax that he is paying. This type of taxation, where if you earn high, you are paying a lesser proportion of your income. And if you earn less, you're paying a higher proportion of your income. This type of taxation is known as what? Regressive taxation. Regressive taxation. What is regressive taxation? This is basically, again, if you see the textbook, it says when you have a higher income, the proportion of tax you pay is lesser. For higher income people, proportion of tax paid is lesser. And for low income people, percentage or percentage of tax paid is higher. Okay, offline, anybody, any issues with this? Sneha, any problems? Because you were not there in the last class. And these three, no. Online, Chirag, Huraira, Krishna, Priya, Rukesh, Sunny, any issues?
Sir, one doubt, sir.
Yes.
If the labor is earning 50 rupees, how can he go and put 100 rupees petrol?
It's just an example, right? Oh, yeah, that's such a good doubt. Right. Let's change that. Okay. He earns only 100. Very good. Who asked this question? Sunny. Yes.
Yes, sir.
Thank you so much for pointing that out. But the point does not change. Even somebody who is earning 100 rupees, even for somebody who is earning 100 rupees, 5 rupees is a big amount for him. He is putting 100 rupees of petrol. And in that 5 rupees, who is he giving? It's not going in his car. It's not, he's not getting petrol. He's giving it to the government. So for him, or even Sunny, even if I make it as 200 rupees, even for somebody earning 200 rupees, 5% is a big percentage. 5 rupees is a big percentage of his income. 5 rupees is a big percentage of his income because he has a low income. And that is what is regressive tax. For low income people, the percentage of tax that he is paying from his income is too much. Sunny, is this clear?
Yes, sir. Yes, sir.
Chirag, Huraira, Krishna, Priya, Rukesh, everybody clear? Quickly type it. Yes, okay, fine, perfect. So we've looked at progressive taxation, we've looked at regressive taxation, and then we will look at what? We will look at proportional taxation. This is basically where you pay tax in proportion to your income. Meaning, if you earn 100 rupees, you will pay 19%. 19% of 100 rupees is 19 rupees. But if you earn 10,000 rupees, you will also pay 19 rupees. And as you can see, 19%, sorry, you will also pay 19%. And 19% of 10,000 rupees is how much? 1,900. So as you can see, Sunny, here it doesn't matter. It's how much tax you are paying is directly connected to or is directly proportional to your income.
Yes, sir.
This type of taxation is known as proportional taxation. Sneha, clear? So progressive is you pay more tax if you make more money.
Yes, sir.
Regressive is if you make more money, you will pay less tax. And proportional is you will pay tax in connection, in proportion with, in proportion to your income. So if your income is more, you pay more. If your income is less, you pay less. It will go in proportion. You understand? So that is what is proportional taxation. So what I'm going to do is I'm going to remove all of. Somebody wants to ask something?
Then I think this both are the same, right, sir? What is the difference between
Which both?
proportional and regressive?
Which both?
Regressive and proportional.
Regressive and proportional. How is it the same? It's like a person who is making 10 rupees, he will only pay 19% of his income. Are you understanding? In case of regressive, what is happening? In case of regressive, if you go and put 100 rupees of petrol, he will pay 5 rupees of that 100 rupees. 5% of that 100 rupees, which is 5 rupees. So for him, what is happening? Because he is a low income person, 5 rupees is a very big percentage of his income. It's not
Yes,
like
sir.
if he's earning less, he will pay a less percentage of his income. No. Are you understanding, Sunny?
Yes, sir.
But in proportional, what is happening is you will pay exactly in line with how much you are earning. And it is not similar to progressive also. I'm going to take off all these things in red and all that and just keep the the main content. Progressive tax is basically where you pay more tax when you make more money. That is, if you make 10,000 rupees, you pay 10%. If you make more than 10,000, you pay 15%. This is you are paying more percentage as your income is increasing. The percentage you are paying, you pay more. The percentage you pay in tax, goes higher as you make more. Sunny, clear?
Yes, sir.
Then comes regressive. Regressive is basically, again, the same amount. 100 rupees, a billionaire will go and put, and 100 rupees, a daily wage worker will go and put. And they will pay maybe 5% of in tax. So for a billionaire, he's making more money, he's paying a smaller percentage of his income. That is regressive. But for the poor guy who is making 100 rupees, he's paying a bigger percentage of his income. And proportional is basically you will pay in proportion to how much you are making. Okay, so that is progressive, regressive, and proportional. Again, you have it side by side. Okay, just look at what I'm underlining. Progressive is as income rises, the tax percentage also rises. That is progressive. What is proportional? Proportional is you pay tax. It will always be 19%. It will always be in proportion to your income. And regressive is basically where when you earn more, you're paying a smaller percentage of your income in tax. Okay, offline, everybody clear? Say hi, any doubts? No. Online, everybody clear? Can you just type clear, unclear, whatever it is. Either of these two you can type. Quickly. Everybody. If you are unclear, you can say unclear. Okay, so everybody is clear. Now comes the types of tax. So progressive, regressive, proportional is done. Now we're looking at types of tax. Okay, and here what we're going to look at is something very simple. I'm going to remove the, okay, just let it be there. It will be helpful when we are revising. See, what you need to know is whenever you get money, you have to pay tax. One place you will get money, one source of money is income. Like you do something, you do a job, you do a business, and you get money. When you are taxed on your income, I mean, I don't know how silly it is to say that when you are taxed on your income, it is income tax. But it is as simple as that, right? When you make money, it's your income. And when you are taxed on that, that is income tax, right? So income tax is when you pay tax for money that you earn through jobs, businesses, that is income tax. Next, another place you can get money from is basically, say, for example, you get a property from your father. This is also money, right? Property is money. But was it money that you earned from job or business? No. Imagine there is a big house. You get it from your grandfather's uncle. Somebody you are getting a big house from, right? This is your inheritance. Everybody knows what is inheritance, right? This is what is inheritance. And the thing is, the good news is you will be taxed on that also. This tax that you pay on any assets that you get from an ancestor, from a relative. This tax that you will pay is inheritance tax. This is tax paid on any estates inherited from an ancestor or a gift received from a relative, for example. So, for example, before death, a great grandfather, before dying, he gifts his bungalow to you, right? This also is an inheritance. And the good news is what? Why am I saying it is good news? Is as if I'm the government. The good news is I will tax you on that also. That tax is inheritance tax. Okay, so income tax, inheritance tax, then what else? The old people. What other tax? Huh? Corporate tax. Now, this name itself suggests what type of tax this is, right? This is corporates, companies make profits, correct? Yes or no? And I want money from that also. Who am I? The government. When companies or corporations or corporates pay tax on their profits, that is corporate tax. Sneha, clear? Companies make profits. The tax paid by corporates on their profits is the corporate tax. Old people, again, old people will sleep in 2 minutes now. Old people, another example of tax, capital gains tax. What do I mean by capital gains tax? Aditya, tell me.
When I dispose of an asset, the money that I earn, I have to pay a certain amount of tax.
Yes, very good. So say guys, I own a farmhouse. This is real. Okay, I have a farmhouse, right? I own a farmhouse, and suppose I sell it. For who wants to buy my farmhouse? Aditya is ready. Aditya is ready to buy my farmhouse. Aditya, it is 50 lakhs. Okay, so can you give me the money? So suppose I sell it to Aditya for 50 lakh rupees. Sneha, you're not happy. You wanted to buy the farmhouse? Please look unhappy. So 50 lakhs is what I get when I sell my asset. Okay. Aditya, can you hand over 50 lakhs? He will give me a check. Okay. Sneha, you still don't look happy. You are unhappy. I'm getting money. You are understanding? You're sure you're understanding, right? You're not lost, no? Okay. No, when since I started talking about this transaction, you look a little. 50 lakh rupees. He's given me the check. Online, everybody, Aditya has given me this check of 50 lakh rupees. 50 lakh rupees. Now, I hope it doesn't bounce, Aditya. I hope the check does not bounce. You have money, no? 50 lakh rupees I got, so I am very happy. Okay, but who is coming? Government. And the government is saying on this money also I have to pay them tax. This is capital gains tax. So can you define, in your words, of course, can you define, Aditya, what is capital gains tax?
When I get an asset, I get
This is tax. Very good. This is tax that is paid when you dispose of, basically sell off certain assets. So even when you get money by selling your own property, you have to pay tax. Okay, any other examples of tax? Huh? VAT. VAT is basically what? Like, for example, GST. When you go and buy something, for example, we will go and buy coffee today. Suppose the coffee is 100 rupees, but there will be a GST on that. How much? I'll pay another 18 rupees for that coffee. So this is basically when you buy goods or services. On those goods or services, apart from the purchase price, you are also giving something to in tax. Are you understanding? Say you go and buy coffee. The coffee is only 100 rupees, but you are paying how much? 118 rupees. 18 rupees you are giving to the government in tax. Are you understanding, guys? So that is it like very either of the two? When I see people clueless, either it's too easy or it's too difficult. Which category is this in? Too easy category or too difficult category? Sneha, let Sneha answer this question. Is it too easy or too difficult? This is what I'm teaching. Easy, right? So this value added tax is basically tax paid by the customer when you are buying goods or services. Okay, so these are the types of tax. National insurance contributions we will look at shortly, but these are the types of tax in simple layman terms. Again, nobody is going to ask you to define anything in the exam. So you just need to know what is what. So on this page, we've just looked at types of tax with which it is over, right? What time was the, guys, I have to follow the rules very, very strictly. 11:25 is the break. Because I saw people drinking water, so I just remembered the break. 11:25 sharp. Guys, you can see my screen. It's 10:55. So please remind me, 11:25, we will take a break. So types of tax is also done. The next thing we're going to look at is direct and indirect, with which once I finish direct and indirect, I will look at new topics even for you people, including, the sums, personal allowance, those things. Just bear with me for direct and indirect tax alone. And what I would do is, for today, I will do direct, indirect, and then I will start personal allowance, do your bit. And then the last 30 minutes or so, you people can leave if you want, because I'll go back and do, code of ethics and all those HMRC. You want to watch, you can. You don't need to.
I said it's not
Easy.
easy.
Boring.
Plan.
Plans. Yeah. Next is direct and indirect tax. I will give you a small example to understand direct and indirect tax. I will remove my farmhouse. Okay. Direct tax and indirect tax. Yes. Ashank, what is direct tax?
I directly create.
Okay. See, one thing is, how many of you have ordered something on Zomato, Swiggy, Zepto, Blinkit, Sneha? One is, I know it's a very silly example, but in one scenario, you directly, when the items come, you directly go, open the door, and directly pay the money to the delivery guy. Here the word is you directly paid to the delivery guy. But sometimes, in my brother's case, almost all the time, if he orders something, sometimes he will directly go and give the money and take it. But most of the time, he will order, the delivery guy will be on the door, he will not go. I will get a call. He'll not come on. I'll get a call, and he will say that money is there on the table. Okay. So he has given me the money. Indirectly, he is paying to the delivery guy. Money is there on the table. I go take that money and I go and give it to the delivery guy. So here what is happening is my brother has paid this money, but he didn't pay it directly. I went and gave it. So that is indirect. Same way, direct tax and indirect tax is where, as Ashank mentioned, direct tax is when you directly open, say, the website of the tax authority, for example. Okay, I mean, people will write this as a definition. And this is just an example, guys. Don't put it down as a definition. But direct tax is when you directly pay tax to the authority. For example, you yourself open the website, okay, and pay directly the tax payable. This is direct tax. Indirect tax is what? Just like how my brother pays it, but I was like the middleman.
It's 11 o'clock.
Indirect tax is basically when you, maybe the customer, for example, you go to Starbucks. You'll pay 18 rupees tax. But who are you paying? Are you going and paying to the government? No, you are paying it to Starbucks. So when you, the customer, pays the tax, now for example, you pay GST in a restaurant, you don't pay it to the government, you pay it to the restaurant. When you, the customer, pays, say for example, VAT to a shop, you are paying it to a shop. See, the golden word here is, the word in black here is the shop. You are not directly paying, pays VAT to a shop, and then The shop in return pays it to the authority. This is indirect tax. So I hope all of you are clear with direct tax and indirect tax. Online, everybody clear? Just type it. Quickly, fast. Direct and indirect tax also done. Right? Now we're going to look at what's a tax year in the UK. Again, everything I have a habit of using examples and analogies, okay? But and these three people who attended the last class, I gave the same example, same analogy. And your year actually is from 1st Jan to 31st December. Is a calendar year. On the calendar, 1 year is 1st Jan to 31st December. But in your school or in your college, your academic year is when? Academic year is June to May. Same way, there is something known as tax year, just like you have an academic year in school or college. Tax year is from which date to which date? 5th of April. So tax year is from the 6th of April, say for example, 6th of April 2024 to 5th of April 2025. Now again, you don't need to write 2024 and 2025. 6th of April of this year to 5th of April of the next year. This period is counted as a tax year and you will pay taxes for the income in this period.
It's
Okay.
for UK tax, right?
This is for UK tax, yes. Right? So we have what is the tax year as well. Okay, I will come back to these things, guys. This HMRC is a very basic thing, but direct tax, indirect tax, I have explained. All of these things I'll come back, tax avoidance, tax evasion, code of ethics, all this I'll come back to. But we've looked at what a tax year is. A tax year is from 6th of April of 1 year to 5th of April of the following year. Okay. Sneha, clear? Now, we're going to look at what is personal allowance. And personal allowance, we had just like briefed. We saw what personal allowance was. Personal allowance. What is personal allowance? Again, I'll give you a small example to explain. But the example is, again, if you make a salary of 10,000 rupees, right? Your father says you have to pay me 10%. But you know what he says? He feels a little bad for you. He feels a little bad for you. You're working so hard and you're paying 10% of everything that you are earning. So what he's saying is, out of this 10,000, he says, out of this 10,000, you keep 2,000. I don't want any tax on that. So on a certain amount, there is no tax charge. Basically, on a certain amount, there is no tax charged. It is for you to enjoy. It is for you to keep. It is for you to enjoy. No need to pay taxes on that amount. That amount which you get to keep for yourself, personal, you are allowed to keep it personal. That amount is personal allowance. That amount is personal allowance. The amount you are allowed to keep for your personal use without paying taxes on it. The amount you are allowed to keep for your personal use without paying taxes on it. Again, you are allowed to keep it for your personal use. Again, there will be no tax on that. That is why the name is personal allowance. These two words make up the term personal allowance. So, your father will charge tax on the remaining. Your father will charge tax on the remaining how much? On the remaining 8,000. This is what personal allowance is. Personal allowance is that amount of that amount on which there will be no tax, there will be no tax charged. It is like tax-free income. That is what is personal allowance, and that is explained over here in a little more complex words, but it is what it is. It is the same thing. So with that, personal allowance is also done. All clear, everybody? So personal allowance is also looked at and covered. Okay. Now, all of you, the question is, who pays income tax? Everyone. The slabs we look at. But income tax is to be paid by everybody, adults, children, everyone, all individuals, including children, are expected to pay income tax. Right? Everybody with an income are expected to pay income tax. So who pays income tax? These are the assessable persons, right? These are basically all the individuals, including children. Now again, this is a one sentence question. You don't need to panic too much. So that's why I've covered it and closed it there. You don't need to worry much. Right? Whoever is earning, whoever has an income will pay income tax. Right? For example, again, I'm just looking at a few examples from the textbook. For example, married couples. Both the parties, both the spouses will pay tax. Because we said everybody with income. So it's not like only the husband will pay, wife does not need to pay, or only the wife will pay, husband does not. No. Everybody will pay tax. Are we understanding what this is? Is there any problem? No, 200% clear. So everyone, including married couples. Okay. So under assessable persons, we're looking at first married couples in place, or basically partners. We look at what civil partners are, but married couples will fall under this category. Right? I hope this is clear. Married couples will fall under this category. Let's look at married couples in a little bit more detail. Right? So when we talk about married couples, again, if married couples or partners, if they jointly, both partners, to pay taxes, this is clear, there is no doubt about this. If they jointly own an asset, right, they will have to share the taxes on that asset also. Are we understanding what this is? Right? So if they jointly own an asset, the income from that asset will be, obviously, will be taxed. And it will be taxed 50-50. So if couples, if partners have an asset, there will be an income from that asset. That income will obviously be taxed because, as I said, income tax needs to be taxed to everybody. That income will be taxed, and that income will be taxed 50-50 between both the partners. But sometimes one partner may own a higher percentage. Maybe, for example, one partner owns 70%, the other partner owns 30% of the asset. Say the husband owns 70%, wife owns 30%, or wife owns 70%, husband owns 30%. When this happens, it is unfair to kind of pay taxes 50-50. Right? Do you online people, do you agree that when this happens, it is unfair to pay taxes 50-50?
Yes, sir.
Yes. So when this happens, they can write and request to the tax authority. Now, I'll not mention who is the tax authority yet. These people know. But they can request to the tax authority to charge taxes based on the ownership ratio. So normally, if you own an asset jointly with a partner, that asset will get you an income. Income you will get from that asset. That income obviously will be taxed. That tax will be charged 50-50 between both the partners. But in certain circumstances, in certain situations, maybe one partner owns a higher percentage than the other partner. So it is unfair to tax 50-50. So you can write to the tax authority requesting to charge the taxes as per the ownership. Right? And that is what is married couple. So under these persons, we've looked at married couples. And that is exactly what your textbook also says. Your textbook, again, whoever wants to read, that's the same thing your textbook says. Now, coming to children. As I mentioned, all people with an income will pay income tax, including children. Children as in people below age 18. These people below 18 years old, 18 years of age, will also pay income tax. However, children, do they have a high income generally? Normally, they don't have any income, so they don't pay tax. But some children might. right? So for children, most of them don't have an income, so they don't pay tax. Even if they have, it's lesser, most likely. It's lesser than adults because they're children, so they earn lesser. And the good thing is, in many cases, their income is lesser than their personal allowance. What do I mean by this? Is remember I told you your father said 2,000 rupees is for you. You don't need to pay me tax. That is a personal allowance. Now suppose in the previous example, I said your father gives you personal allowance, PA. Now I'll not keep explaining again and again. You need to know PA is what? PA is this amount, no need to pay tax on this. Your father says 2,000 rupees is personal allowance for you. But what if you are a child who has an income of 1,800, then your income is less than the personal allowance, so obviously you don't have to pay tax. If you're a child who has an income of 1,800, your income is lesser than the PA. So obviously, you don't have to pay tax. This is what happens mostly in case of children. In many cases, their income is lesser than their personal allowance. Therefore, they don't pay tax. In most cases. But in some cases, obviously, if their income is more than personal allowance, rich children, then obviously they have to pay taxes on that. So this is about children. Also, we have completed. So under accessible persons, we've looked at married couples and we've looked at children also. Right? Is this clear to everyone? Offline? Now comes the taxable income. And I will explain it to you with the help of an example. How will you calculate how much is the taxable income that you have? Right? That is what we're going to look at over here. So I will scroll down and I will tell you step by step as to how to calculate the income that is taxable. You understand? So not all, I mean, some income there will be personal allowance, so you don't need to pay tax on that. For example, I'll give you a very simple example. You earn 10,000, in which personal allowance is 2,000. So not all income is taxable. Your entire income is what? 10,000. Not all of it is taxable. Out of that 10,000, 2,000 is free. So the taxable income is only 8,000. So this is something you need to know how to calculate. Because otherwise you'll go and sit and pay tax for all your income, which is obviously not right. That's why you're doing tax. You're doing tax to know you will pay tax on how much of your income. You will not pay tax on all of your income. Right? And that is what is taxable income, the income on which tax will apply, the income on which tax will be charged. The taxable income is the income on which tax is charged. As simple as that. Okay, now I will explain this to you with the help of another example. I gave you a very simple example, example 1. Super simplified, just for you to know what is taxable income. Then example 2 gets a little bit more complex, but it's still simple. Basically, you will add up all of your income. So step 1, you need the total income. Step one is you need the total income. So you will add up all your income, such as you add up your salary from your job. You add up, maybe you have a side business. That is also income now. You will add up, you need the total income. So you add up all incomes. How many of you have a salary from a job right now? Nobody. Anybody has a side business? So you add up, like I have a salary from a job. I will add that. Then I have profit from a business. So that is also income, profit from business. That also needs to be added. Then remember I had a farmhouse. I had. So I used to get rent from that farmhouse. That is also income, rental income. That also needs to be added. Right? Maybe you've invested in a company from whom you're getting dividends. That is also income, dividend from investments. Okay. Or you put money in the bank. If you put money in the bank, bank will pay you what? Interest. So interest from a bank, that is also income. So all your income, maybe you get pension. That is also income. So step one, guys, is to add up all the income that you have. That is step one. You'll take the total. Take the total. That is the first step. Once you have added up all the income and you have taken the total, what is the next thing that you will do? You need to, not all of that is taxable. You need to calculate from that how much is taxable. So step two is to deduct any tax reliefs. Sometimes, as I said, the government rewards you by giving you maybe a discount on the tax, like a relief. You don't have to pay it, right? So step two, from your total income, you don't have to pay tax on all of that. You will deduct any tax relief. As I said in the first part, the government sometimes rewards you by relieving you, by giving you some relief on the tax paid. So the second step is to deduct any tax reliefs. Is this clear? Are we making notes? Make sure you're writing, guys. Make sure you know what it is. Step three, again, what will you deduct? Some amount of that income is for you to enjoy. What is that amount known as? You will deduct personal allowance. The remaining income, what is left after these three steps, is your taxable income. That is all. As simple as it is. Again, I can show you the textbook side by side, and that is the same format the textbook is following. Step one, step two, step three. Guys, it's 11:25, meaning it is break time. You have a break until 11:35. And guys, online need not leave the meeting. Stay in the meeting. It's just that after 10 minutes, by 11:35 sharp, you have to come back and be in front of the screen. Okay, as of now, 11:25 sharp, as per the rules, I'm supposed to take a break. Again, enjoy your break. Come back in exactly 10 minutes by 11:35. Yes, guys, it's 11:35 a.m. sharp. Online, are you back? Can you just type it saying that you're here? Online, just type.
The reason why you said that.
No, needs to be fixed. Yes. So now this is done. Now the next thing we're going to look at is, again, guys, as you can see, this is something that I've covered, okay, in before the break. We've looked at classification of income. I said there are different class income from your job, income from your business, income from your property, pension, dividends, interest received from the bank, and so on. All of that is what is there in what I have highlighted, right? Next comes non-savings income. An elaboration on the non-savings income is what we're going to look at right now. See, what is this non-savings income? I'll name this as order of deduction. Taxable income is done. Now we're going to look at order of deduction. What happened? Not able to see? Where? Student. Who just says yes?
Schedule the recording.
Now?
Yeah, yes, now.
Somehow I'm not able to see it in the chat box. Lecture recording comes available. So you will get the recording of this after the class. So probably once it will take some time for the video to get rendered and all that. So as soon as that is done, maybe an hour or two, you will get the recording. Okay. So order of deduction is what we will look at now. What do I mean by order of deduction? It is a very simple concept, which is saying, see, again, we haven't looked at how much is the personal allowance, right? But let me brief you on that. The personal allowance for the tax here is 12,570. Okay, personal allowance for the tax here is 12,570. This is the personal allowance in the UK that you need to be aware of, right? Now, from where will, remember I told you in the previous thing, you have to deduct your personal allowance. You will deduct your personal allowance, but remember I also told all of you, look at the screen. I said you have to deduct your personal allowance, But I also mentioned that there are so many incomes that you might possibly have. Salary from your job, profits from your business, dividends received from investments, interest received from the bank, pension. So my question to you is this. Say your salary is 24,000. Interest received, I'm just giving you an example, okay, is 15,000. Dividends received is 17,000. My question is, this is your income, but you need to get the taxable income, right? Your total income is 24 plus 15, 39. 39 plus 17, 49, 56,000 is your total income, right? Now, from that income, you will deduct personal allowance to get the taxable income. Yes, you deduct personal allowance to get the taxable income. True? Now the question is this. All of you look at the screen, everyone. From where will you deduct this 12,570? From your salary income, from your interest received, from your dividends received, from where?
Salary.
Even if you deduct it from the total, I mean, you need to basically be, no, it will not be the total. There is a certain order in which you will deduct the personal allowance from. And your father, what happened? Your father here, the government, is very, they want you to enjoy the money that you earn by working. So they are telling you that when you deduct your personal allowance, deduct it from your salary. Don't deduct it from interest income. Interest income is what? Interest income is like a savings when you put money in the bank. So not from the savings income, right? So your father says, because he is worried about you and he appreciates your hard work, he says personal allowance has to be deducted first from the non-savings income. Non-savings income like what? Like your salary, like your business profits. So first you will deduct your personal allowance from non-savings income. Then if there is still some personal allowance left, maybe for example, your salary and all was very less, right? If still there is personal allowance left, then you will go and deduct personal allowance from the savings income. Savings income like what? Interest received. Savings income, right? Interest received or building society interest. There is something known as that, which we will look at. That we will put in a separate category, dividend income. So this is the order in which you will deduct your personal allowance. So first thing, your father appreciates your hard work. So he wants you to enjoy your allowance from the non-savings income. That is the first place you will deduct personal allowance from. So that is what I'm covering over here in this section of the textbook. Right? Once that is done, you will deduct from the savings income. And once that is done, you will deduct from the dividend income. So personal allowance has to be deducted in this specific order. Now, this is something you'll unfortunately have to remember. But again, the clue is that the government wants you to first enjoy your non-savings income, because that is the income that you are working and getting. So the first place you will deduct it from is the non-savings income. All clear? Even the old people, now this is new for you, right? So I hope this is very clear. Right? So that is what is personal allowance that we've looked at. Again, if we go here, we've looked at what is non-savings income. This is again, what is savings income? Savings income is basically that income which we're going to look at in more detail in the next chapter. But non-savings income is the income that you work hard, you earn and get it. So non-savings income is earned income. This is earned income. For example, salary, for example, even property income. Is a non-savings income. Right? We've looked at what is non-savings income. In the next chapter, we will worry about what is savings income. Right? With which this is also done. Order of deduction. What is the order of deduction, Sneha? Which income? What is that kind of income called? Non-savings income. So first you will deduct the non-savings income. Then after that, you will deduct the savings income. And then if still some personal allowance is left, you will deduct it from the dividend income. This is the order, and that is what I've covered over here. Okay, so personal allowance is complete. How much is the personal allowance amount? Amount you need to know is 12,570. Now, once that is done, the next thing that we will look at is something known as reduction of personal allowance. What is reduction of personal allowance? Guys, your father, when he tells you your salary is 10,000, and he says 2,000 you can keep for yourself, you enjoy. He says 2,000 keep for yourself, you enjoy. What is this 2,000 he is giving you? Online, who can tell me? Huraira, can you tell me what is this 2,000 that he's giving you? He's allowing you to keep it for yourself. No need to pay tax on that. What is that called? He's allowing you to keep it for your personal self. Who can tell me what is this?
Personal allowance.
Personal allowance. But if, for example, your salary is 1 lakh, then your father does not feel sad for you anymore. Right? In this case, you have a higher income. So the father does not feel sad for you anymore. So in this case, when your income crosses 100,000, personal allowance, in this case, personal allowance is dropped. It's no longer going to be that 12,570 once you cross an income of 100,000. So what does reduction in personal allowance say? Reduction in personal allowance says that once you cross an income of 100,000, the personal allowance is dropped, goes down. Online, everybody clear? Can you please type it? No, it will not go to zero. I'll give you 1 minute to make a note on what happens to. Again, I'm not going to any numbers. I'm just going to look at what is it, why are we doing a reduction in personal allowance? Guys, I am sitting with a calculator, as you can see. So it is necessary that you also have your calculators in place. So guys, what is happening in this case? Again, all of you, I'll explain this numerical part of it by looking at illustration 1, and you need not look at the solution. Please don't look at the solution, just look at the question. The question says, Ethan received a trading income of 110,000 in the tax year. He also made gift aid donations of 4,000. He made donations of 4,000. Okay, I'm not deducted yet. He made donations of 4,000. Again, don't worry about anything. You just need to know the information. We need to compute his taxable income. Look, this is the trading income. We need to know his net income. His trading income was 110,000. But he made donations of 4,000. So in this case, his net income will be how much? 110,000. Then what happens? Again, his net income is 4,000. So his adjusted net income is only 106,000. Are you understanding? Right? So this is his adjusted income. How did I get adjusted income? Remember, adjusted income is simply the trading income minus any donations made. So adjusted income is trading income was 110,000 minus 4,000. So adjusted net income is 106,000. Okay. Meaning that your income is higher than 100,000. You see this? Your adjusted net income is higher than 100,000. Your ANI is higher than 100,000. So for that extra 6,000, the personal allowance will drop. For that extra 6,000, the personal allowance will drop. You understand? So what is happening is, how do you reduce the personal allowance is, again, the excess is 6,000. So from 106,000, if you deduct 100,000, it is 6,000. And there will be a drop in personal allowance. 6,000. Again, what do? You deduct 50% personal allowance from that extra amount. The extra amount is how much? 6,000. So you will deduct 50% of that amount. You will calculate how much is 50% of that amount. 50% of 6,000 is 3,000. Therefore, what you are going to do is, you will reduce your personal allowance by 3,000. So the reduction in personal allowance will be 3,000. And we all know that the personal allowance is 12,570. And we know that the reduction in personal allowance is 3,000. So what will we do? Reduction in personal allowance is 3,000. We all know personal allowance is 12,570. So the personal allowance now after the reduction is, again, from personal allowance, we're making a reduction in personal allowance of 3,000. Therefore, now the personal allowance will be 12,570 minus 3,000. The new adjusted personal allowance will be 12,570 minus 3,000 will be 9,570. So as you see, again, personal allowance, let me summarize this, okay? Personal allowance is 12,570. Point number one, 12,570 per annum. However, if your adjusted net income, your ANI, crosses 100,000, there will be a drop in personal allowance, or PA. There is a drop in personal allowance, right? So the personal allowance, all of you look at the screen, will no longer be 12,570. It will definitely drop. Okay. How do you calculate the drop in the personal allowance? What you do is, again, as soon as the adjusted net income crosses 100,000, whatever is the excess, you will calculate 50% of that excess. When your ANI crosses 100,000, you will deduct 50% of the excess from the personal allowance. What do I mean by that? For example, in this case, your adjusted net income was 106,000. So the excess is how much of 100,000? If you compare 100,000, how much is the excess? The excess is 6,000. So you deduct 50% of the excess. 50% of 6,000 is 3,000.
It's 12 o'clock.
This amount will be deducted from where? It will be deducted from the personal allowance. So if the personal allowance, not if, the personal allowance is 12,570, you will deduct 3,000 and you will say now because you have an income of more than 100,000, your new personal allowance is only 9,570. I'll give you another example. Suppose you have an adjusted net income of 102,000. Again, how much is the excess of 100,000? 2,000. So the excess, your adjusted net income is 102,000. From 100,000, there is an excess in net income. Excess of ANI is 2,000. What you will do is, you will take 50% of that 2,000. 50% of that 2,000 is 1,000. And that will be the reduction in the ANI. Reduction in personal allowance is 50% of the excess of ANI. ANI is 2,000 here. 50% of that is 1,000. So you will reduce the personal allowance by 1,000. So the new personal allowance will be, the reduction in personal allowance is 1,000. Personal allowance, is 12,570. So the new personal allowance will be from 12,570. If I deduct 1,000, the new personal allowance will be 11,570. Is this topic and concept clear to all? Online especially, is this clear? Can we type yes or no? Everybody type. Sunny, Rukesh. Everyone, Sunny and Rukesh, are you there? Offline, is this crystal clear and easy? Sneha, is this easy? So let's look at test your understanding 1. So we have seen illustration 1. Now we're going to see what is test your understanding 1. Ellie received employment income of 125,000 in the tax year 2023-2024. She also made donations of 16,000. Calculate her taxable income. Right? So again, test your understanding 1. She had employment income of 125,000. All of you are expected to sit with calculators. Donations made were 16,000. First of all, you need to know what is the adjusted net income. I don't know. Let it be X. That is the first thing we need to do. Second, we need to know what is the personal allowance, because her income has crossed 125,000. So what is the personal allowance? That also I don't know. Once you deduct the personal allowance, you will get the taxable income, which I also don't know. So the first step is to calculate the adjusted net income, which is going to be, again, employment income of 125,000 minus the donations made 16,000. So the adjusted net income would be how much? 1,09,000. So you've got the first answer to the first question. Now you need to know the personal allowance. So the first question I'm putting it in red. Then we need to calculate the personal allowance. One thing we need to know, by default, personal allowance is always 12,570. But because your net income has crossed 100,000, there will be a reduction in the personal allowance. So the reduction in PA is 50% of the excess. How much is the excess? So 50% of the excess 9,000 is 4,500. So the reduction in personal allowance will be 4,500, which will be how much? So the personal allowance will now be, can somebody calculate and tell me? 8,070. I'm putting this in blue. Then comes your taxable income. Think about it. You have, again, let me show this much to you. Adjusted personal allowance is 8,070. I got that answer. Okay. Again, adjusted net income was 109,000. I got that answer. Now, taxable income, how do I calculate? Again, I need to be able to deduct from my, remember, personal allowance is deducted first from your non-savings income. So you have this here. Again, your employment income is 125,000. Remember one thing, again, that 16,000 was a donation. So do you want to tax on that? No. So you are only taking the employment income. Okay, 125,000, and from that, out of that 125,000, a little bit is for you to enjoy with you. Keep. How much? What is that called? It is called personal allowance. And as per this question, the personal allowance is 8,070. So from 125,000, if I deduct 8,070, how much is the answer that I get? 116,930. So the taxable income is 116,930. So you have all three answers.
So, would you consider the donations while calculating the tax?
Wait. Side by side, guys, have a look at the question and answer. Yes.
So, how would I cover this from 125,000 to minus 16,000 because donations were made of those in that. And after that, I minus the.
Try to understand once again what you're saying. Guys, just have a look at this. So
Other incomes are also taken and you have to calculate the tax.
we will look at
You
that.
have to-
We will look at that. Guys, make a note. Okay, can we move on? Online, everybody clear and comfortable? Online, just type it. Okay, now, you know, this question is there. And in this question, it says taxable income is 116,930. So that is the income on which you will pay taxes. So the second step, now that you know what is the taxable income, the second step is to calculate from that amount, how much will be the tax liability? How much tax do you have to pay? On the taxable income, which we have calculated, we know that that income we have to pay taxes on. On that income, how much will be the tax charge? The tax payable. Is this clear? That is what the basics of this. Now we're going to look at each. Again, I don't want you to look at this for now. Please ignore this completely. Right? So we've looked at test your understanding 1 as well. Now, we'll start off with non-savings income. Right? And I just want you, the rates of income tax, I want you to make a note of, because this, I cannot give an analogy or example. This is something you have to remember. For anything where I can give an example or analogy, I'm giving. But this is things you have to recollect, remember. So that's why, unfortunately, in this specific case, we will be memorizing. There's not much I can do. Right? Rates of income tax for non-savings income. For example, your salary, for example, your bonus, for example, your pension, right? Employment income, pension income, property income, trading income. All of these are examples of non-savings income. What are the rates of tax? What are the tax rates for non-saving income? Again, as I mentioned, this, there's no point me, explaining it, using an analogy, because this is something that you will have to remember. So in this case, what we are seeing and what we are understanding is there is a 20% tax liability. So on non-savings income, the tax liability will be 20%. You will pay 20% on your non-savings income. But it's only up to a certain point, it is 20%. So it is 20% up to an income of how much? 37,700. So the income tax rate for non-savings income tax rate for non-savings income will be 20% will be the tax rate up to 37,700. Then what happens? If the income increases, if the income crosses 37,700, a rate of 40% will apply. So 37,701 onwards, the rate that will apply is 40%. The income tax rate that will be applicable will be 40%. It will apply until 125,140. So until an income of 125,140, you will pay an income tax of 40%. So you just need to remember 20%, 40%, and 45%. Anything crossing 125,140, you will pay an income tax of 40%. Your income tax liability as a percentage, sorry, not 40%, 45%. So again, guys, for your non-savings income, such as employment income, trading income, property income, pension income, you have to pay tax. That tax rate is 20%. It is 20% till 37,700. Till your income is 37,700, you will pay a tax of 20%. The minute your income crosses 37,700, say it becomes 37,701, then you will pay a tax rate. Your tax liability will become 40%. 37,701 till which number? 125,140. Till 125,140, you will pay an income tax of 40%. And if your income crosses 125,140, you will pay an income tax. You will have an income tax liability of 45%. These numbers, unfortunately, you will have to remember. That's why I said tax is a very easy paper. Tax is not very difficult, right? With tax, you just need to know how much is the tax rate for how much income. With which you're done. You just need to calculate, do the basic calculation. There's not much of, like reasoning to use and all that. Like in audit and assurance, you have to sit and go like, oh, this is the substantive procedure for this case. You don't need that much of, logic. Right? So comparatively, it's an easier paper, and that's why comparatively it has a higher pass rate also. Right? So now if you've understood online, can you type it whether you've understood this or not? Real quick. Yes. Now we'll try to understand this with the help of an example. This is already something I've explained to you earlier. We've written it. Just read that. I've already written it. I've already explained that. First is again income tax liability. Sorry, we looked at personal allowance liability is deducted in this order. Which one? Non-savings income, then savings income, and then dividend income. Same way, income tax liability will also be calculated in that same order. Non-savings income, savings income, and dividend income. I hope that's clear. Now, let's look at illustration 2. No need to look at the answer, but illustration 2. Amir has a trading income of 21,165 and he has employment income of 3,000. He has no savings or dividend income. So both are his non-savings income. Trading income is also an example of non-savings income. Employment income is also an example of non-savings income. Calculate Amir's income tax liability for the tax year. So his trading income, employment income, again, just basic calculation. Total income is 24,000. Total income is 24,165. Now, has his income crossed 100,000? So we don't need to adjust the personal allowance. Personal allowance will stay as it is 12,570. We will make an adjustment to personal allowance only if his income crosses 100,000. So his taxable income will be how much? 11, how much? 11,595. Let's just check if that's right. Yes, 11,595. Now, remember, I gave you brackets. Your income tax liability is 20% up to an income of 37,700. Here, Amir's income is less than 37,700. Therefore, the tax liability will only be 20%. 20% of his taxable income, which is 11,595. Therefore, the tax liability, 20% of 11,595 is how much? 2,319.
His income was 40,000.
Yes, we will do it. Yes, we will do that in the next illustration. So the income tax liability is 2,319. Offline clear? Online, are we clear? Is this question very easy? How is tax, guys? Easy or hard? Or no? That's the important thing. Right? So, clear. Now we'll move on to illustration 3. Again, you don't need to look at the answer, please. Just look at the question. Guys, I'm solving the question for you, so you need not look at the answer. He has a trading income of 43,765 and he has employment income of 7,000. Again, both are non-savings income. There is no savings income she has. Calculate Tala's income tax liability. Right? Basically, his total income is 43,765 plus 7,000 should be 50,765. Now, again, guys, has his income crossed 100,000? No. So, personal allowance will stay at 12,000. Why am I taking personal allowance of 12,570? Why am I not adjusting it? Because his income is less than 100,000. Personal allowance is for you to keep. You don't need to pay tax on that. Therefore, you will deduct it from the total income. So the taxable income will be 50,765 minus 12,570. How much is it? 38. 38,195. Now, his income has crossed 37,700. So things get a little challenging. How do things get a little challenging? Remember, up to 37,700, the income tax liability is 20%. So 20% of 37,700 would be 7,540. This is the tax he will pay up to 37,700. But his income is 38,195. So there's how much extra income he has? Again, the online people, his income is 38,195. Up to 37,700, he's paying 20%, which is 7,540. For the excess income, how much is the excess? For the excess 495, is it 495? He will pay the next slab. How much? 40%. So he will pay 40% on that. 40% of 495 should be 198. Therefore, his tax liability will be 7,540 plus 198, which is 7,738. 7,738. This will be his tax liability, 7,738. Now again, step by step, let's cover it up again. Trading income is 43,765. Employment income is 7,000. So his total income is 50,765. His income is less than 100,000. So his personal allowance will not be adjusted. His personal allowance will be 12,570, which you will deduct from his total income to get his taxable income. His taxable income is 38,195. We said up to 37,700, you will pay 20%. So 20% of the 37,700 is 7,540. Then for anything beyond that, that 495, we will pay the next tax slab of 40%. So 40% of 495 is 198. Therefore, your tax liability is 7,738. Guys, done? So, we've also looked at illustration 3, and this chapter itself is very simple.
For calculating adjusted net income, taxable income, in all cases, it won't be the same. If they give good information.
Yes, obviously.
So adjusted net income, you only adjust for gifts.
Adjust, yes. Yes. We will see later on a few more things, but for now, yes. Just don't worry, yes. For now, just look at this. Do it step by step. This is all it is for tax. Keep it easy, keep it simple. Now, guys, it's 12:28. And if the old people want, they can leave. Right? Because what I'm going to do, I've already reached the second chapter. Mainly, basically, what I'll do is by Saturday. Saturday is the next class. Tomorrow? Tuesday. Yes. So in the next class, so your class is on Tuesdays, Thursdays, and Fridays. Okay. So on the next class on Tuesday, we will finish off chapter 2 and move to the third chapter also. Right? Now again, those of who are clear with HMRC and those kind of things can leave. If you want to stay, you can stay. Say how are you there? Professional code of ethics, all those things you were there. Structure of the UK tax system. Okay. So guys, give us a minute. We have a couple of them who are leaving. And then once they leave, we can continue. Meanwhile, this is what we've looked at so far. You can go through it. Yes, guys. Now, again, we've looked at direct tax, we've looked at indirect tax. Now, I'm going to introduce something to you, which is known as the structure of the UK tax system. Okay, and I'm going to add that over here. Structure of the UK tax system. Again, give me a minute. I've just left. Okay. Now, what does this structure of the UK tax system say? First of all, you need to know something known as the HMRC. What is the HMRC? HMRC, again, I can show you my screen. This is a department, governmental department that, again, I'm showing you the screen. This is a UK government department that is responsible for the collection of taxes. What is the HMRC? This is a department of the UK government, connected to the UK government, that is responsible for collecting of the tax. So it is, I mean, for a very long time now, it was Her Majesty's Revenue and Customs. But now, again, it is His Majesty's Revenue and Custom, given that now it is His Majesty ruling. Right? So His Majesty's Revenue and Customs. Right? Now, that is what the HMRC is all about. That's it. So HMRC is the body. Again, you don't need to look at the textbook. Just look at what I am typing. You need not look at the textbook. I'll let you look at the textbook later. But the HMRC is His Majesty's Revenue and Customs. This is the government department that administers all areas regarding UK tax. So what is it? Again, I'll put things in question answers. What is it? His Majesty's Revenue and Customs is the governmental department that is responsible for administering the tax system in the UK. That is what it is. What are the people called who work for the HMRC? The staff of the HMRC called. They are known as officers of revenue and customs. That's it. Make your life easy. Keep your life easy. They are called what? They are called officers of revenue and customs. So I've put the heading and I'm putting under that questions around that. How will you pay? Most people most commonly, you just have to go to their website and make the payment to the HMRC, whatever is your tax liability. Again, the website name is given hmrc.gov.uk. You can obviously have a look at that website for your satisfaction. Right? So what is the HMRC is covered. Right? Structure of the UK tax system. Now, the next thing that we're going to look at is what? Again, I see people who are not there in the meeting join in between. Please avoid that because you will not be able to understand. Right, Shelly, I didn't see you in the meeting, but I see you now. Make sure you are there throughout the class. Only then your understanding will be good. Now, we're looking at sources of tax law. Now again, what do I mean by sources? Sources mean where do we get tax rules from? Sources of tax law. Where do we get tax rules from? Obviously, there are rules about tax, correct? But where will we get it from? Where do you get it from is the question I'm asking you. One is basically direct legislation. Legislation is the rules of the state, the tax legislation. So when the state makes some rules, it makes law for the taxes as well. Right? So you know, okay, from the legislation, you know what are the rules about taxes. This is the law. This is the basic law that is governed by the state. The basic law governed by the state, right? Now, what we will look at is, now obviously this is the law. Apart from that, you will look at case law. What is case law? This is basically where you have, guys, just give me 1 minute. Guys, next is case law. What do I mean by case law? See, sometimes I'll give you a story, okay? I'll tell you a story. Once, this is a real story. Once I got a call from a parent, and the parent asked me, "Sir, when will you restart classes?" So for one of the papers, I think it was PM, the parent asked me, "Sir, when will you restart classes for my daughter?" So I was shocked because I never stopped classes. I had never stopped classes, okay? But this lady is calling me and asking, "When will you restart classes?" So I was a little surprised. I said, "Ma'am, we never stop the class. Classes are ongoing." So she was a little shocked. She said, "Sir, but my daughter told me that you have stopped the classes for some days." I said, "No, ma'am, nothing like that. Classes are going on." Then she was shocked and then she was scolding her daughter because her daughter had lied to her saying that, classes have stopped. After this case, after this incident, I came up with an understanding that if a student is absent for more than 3 classes continuously, we have to notify the parents. This generally happens in like the paid batches. we notify and drop an email to parents saying that there is absenteeism. Where did I get this law from? It wasn't there before. It came from a certain case that was brought to me to my court. Now, obviously, not to my court, not literally to my court, but this came to me, this understanding of law came to me because of a specific case, because of a specific incident. Same way with respect to taxes also, you obtain an understanding of tax law by looking at what cases that were brought before the courts. Taxes also, with respect to taxes also, you obtain an understanding of the tax law by looking at the cases that were brought before the court. Right? And that is one source of getting information about tax law. One place is by just looking at the rules, which is the legislation. The other place from where you get an understanding of the tax law is by looking at the cases that were brought in front of the court that related to tax. So that is why that is one of the sources of tax law. Are we all clear, guys? Can you type yes or no? Quickly, statute law and case law. Are we clear with what this is? So these are the two places you get sources of law. First is the legislation. This is basically the rules that are there around taxes. Second is case law. You obtain an understanding about law. You obtain an understanding about tax law by looking at the cases that were brought before court. That is the second source. You can make a note of these two. The third place you get an understanding from is, remember HMRC, His Majesty's Revenue and Customs. They are there for tax purpose, right? So they also give you guidance on tax law. So another source of tax law is the HMRC. So whenever you want to understand, whenever you want to interpret tax law, the HMRC guides you in interpreting it. Or the HMRC also guides you on how to implement tax law. The HMRC also guides you on how to implement tax law. So HMRC is not making law, but the HMRC is one source for you to obtain an understanding about tax law. This is one source for you, the common man, to get an understanding about tax law. So whenever there is a confusion, whenever there is, say, you want help in implementing a tax law, one source of information about that tax law is the HMRC. Whenever you want to interpret a tax law, you don't understand it. One source of tax law, one place you can get information from is the HMRC. So are these three things clear? Is this clear, guys? Clear. Another source of tax law is this. See, what are sources of information for you? For tax paper. One is class. You can get information from the class by attending my class. Second is by taking class notes. Third is probably by looking at my notes. Correct? Yes, I also have some notes which I refer to teach, because obviously I'm teaching all the 5 skill level papers. So obviously, I mean, I'm not, Superman to remember everything, to remember all the points. So I also have basic notes that I write, which guides me. Obviously, I'm not reading out from somewhere. As the offline students can see, I'm explaining it on my own. But I also have notes that guide me. Ki after this, explain this topic. After this, do this. After this, do this. So I also have some notes internal. Correct? If you look at my notes, it will help you understand. Correct? Same way, HMRC also has its own manuals, internal manuals of the HMRC. That is their own notes produced by the staff of the HMRC. Right? Their own manuals produced by the staff of the HMRC, and this is available to the public. So you can look at the manuals of HMRC and obtain an understanding about the tax law. So that is another source of information about tax law. Are we all clear on this? Then what do we have? HMRC will have its own flyers, its own booklets, its own leaflets, its own pamphlets. So when you go to HMRC's office, they will have some pamphlet, something will be there. That is also a source of tax law. You can look at that. So HMRC will have its leaflets, booklets, etc. This is explained. So obviously leaflets and booklets are for general public to see. So here in these leaflets and booklets, HMRC outlines a lot of topics related to tax in non-technical words, because remember, this is what? This is leaflets. People will come and look at it. So obviously it has to be non-technical, simple words, in layman words. So that is also a source of information for you about tax law. You can look at HMRC's leaflets, booklets. It will be explained to you in non-technical words. It will be explained to you in layman terms. So that's a good source of information for you about tax law. And after that, the opposite of that is detailed technical guidance. It is the opposite of leaflets and booklets. Here, HMRC uses technical words and explains things in technical detail to experts, to tax agents, to experts, such as tax agents and advisors. Remember, HMRC leaflet and booklet is for the layman. For the layman. That's why things are explained in non-technical, simple layman words. But the opposite of that, HMRC also has something for the experts where they explain things in more detail, in a lot of technical detail for the tax experts, such as tax advisors. That is detailed in the technical guidance. These are basically technical notes. And these are some of the sources of information about tax law. About tax law. Just have a look at these 6 things. Tell me if there's a problem. So guys, it's 12:50. Again, I'm supposed to stop sharp at 12:50. So I've covered these 19 topics today. So as I mentioned in the last 10 minutes, you are given time to review everything that I have covered. And if you have to rate your understanding out of 5 means everything was clear, easy, crystal clear, simple. 0 means you didn't understand anything. If you have to rate your understanding out of 5, how much would it be? Again, you don't need to give the answer immediately. You can quickly review all these topics. Chirag has typed. What about others? Chirag, now how we are structured is if you give 4.5, you also need to mention why are you at 4.5. Like obviously there is something you didn't understand. I mean, what is it? So that is our system. So in the last 10 minutes, if you've given 4.9, obviously there's something that is missing, something you've not understood. So you will have to explain to me what is it that you haven't understood. Others, please type your rating out of 5. Sunny is 5. Others, everybody? Pereira is 5. Sachit Chaudhary, I didn't see you throughout the recording. So Chirag, you'll have to tell me where is it that you need. No, here when you give your rating out of 5, see obviously you have to study. There is no doubt about it. As per that, you should give 0 because you have not studied at all. Here I asked you your rating out of 5 because if there is a specific topic that you did not understand, you will mention it to me. So I'll help you in that. But because you say you understand all, then in that case, as per that, your rating has to be 5. You will give less than 5 if there is some topic which you didn't understand, something which you missed, something is a problem. There you can give less than 5. So I'll go back and help you in that topic again. With which the session for the day is done, guys. Again, our classes are on Tuesdays, Thursdays, and Fridays between 10 a.m. and 1 p.m. Right? So whoever is attending live needs to ensure that you are there, 5 minutes in advance, and you have a proper mic and a proper internet connection so that there is a undisturbed experience. Okay. So I hope all in all the class was good, guys. Anybody with anything you want to mention? Again, there is a hotline number that we have, which we've shared in the group as well. So if there are any queries, if there are any questions, if there are any clarifications, you have to WhatsApp on that hotline number. We will keep mentioning that again and again in the group also. But if there are any questions and clarifications, please drop a WhatsApp message to the hotline number. All right. With that, the session has come to an end, guys. Thank you so much. I will see you on Tuesday. Thanks. Bye.